Hey, welcome back to Broke Student Advice. So, as the members who've been following our portfolio know, we've been investing into cryptocurrency since 2020, dollar cost averaging into Ethereum since around the $500 mark. And myself personally, I had been investing into cryptocurrency far before I had even set up Broke Student Advice. So here's what my investment thesis was back then, and here's what it still is because it hasn't changed much. So here's the summary. Since its inception in 2009, Bitcoin, and the cryptocurrency market in general, has followed a pattern of market cycles, characterized by large parabolic moves to the upside, followed by lengthy bear market periods. And this pattern has continued for around the last decade, which has given the cryptocurrency market a very clear logarithmic trend to the upside. Now, in general, the cryptocurrency market as a whole moves very closely with the price of Bitcoin, and not just because most of the cryptocurrency market cap is Bitcoin. In general, they move together, whether it's upwards or downwards, and you can say that most of the altcoins follow the price movement of Bitcoin pretty closely. Now, regardless of the timing of the market cycles, we could be confident with this knowledge alone that in general, adoption of cryptocurrency among institutions like governments, corporations, and banks is increasing over time. And this long-term trend provides us with pretty good indication that if we hold Bitcoin with a long enough time horizon, we will see very good returns, more than the average market. As long as we accept that cryptocurrency is a new financial technology that is here to stay and won't be banned by governments. However, we can also look at the forces behind this pattern to get a better understanding of when the cycles will happen and the general price range that they will fall in. Bitcoin, Ethereum, and most other cryptocurrencies are defined by their decreasing rate of supply. New coins have to be mined, traditionally using proof of work, which means your computer has to solve calculations in order to mine new coins. What this means is that there is not an unlimited new supply of coins coming in. Unlike the dollar, which is printed by the Federal Reserve, it requires something tangible to create new Bitcoin, which is that the computer needs to use energy. This is why some people refer to Bitcoin as the first energy-backed currency. So every few years, Bitcoin has experienced what is called the halving, which cuts in half the rate of new coins that are produced. In addition, the difficulty of mining Bitcoin increases. So the result of this is that the rate of supply of new coins being produced goes down over time. And in general, we can look at the rate of adoption among institutions and retail investors to see that the demand for cryptocurrency is going up, or at least it's not going down over time. Now, basic economics tells us that when the supply goes down and the demand stays the same or goes up, the price will increase. Now, many prominent figures in the cryptocurrency community have put together models that attempt to exactly predict the future price based on these factors. And one of the most popular is the stock-to-flow model, which attempts to use the rate of new supply to determine the price. Now, depending on how you implement the stock-to-flow model, as many have done, it will show you an estimated price of up to $1 million per Bitcoin in the future. However, we're not going to put all our eggs in that basket, so we'd like to make a more conservative estimate. PhD nuclear engineer Benjamin Cohen, who makes excellent videos, which I'm a big fan of, has put together a number of different models that together paint the picture of lengthening cycles and the returns are diminishing. His models, and I will link the videos in the description, estimate that the general top of the current cryptocurrency market cycle will be when Bitcoin reaches around $100,000 to $300,000 in USD. So my investment thesis has been to dollar cost average into cryptocurrency, provided Bitcoin is below these levels, weighing our buying heavier the farther away from that target it is. Of course, last year in 2020, it was pretty clear that we were still in the bear market phase, and it seemed highly likely that in the next few years, cryptocurrency would enter another bull market and experience a parabolic move to the upside. Now, with that being said, Ethereum, which is the second largest cryptocurrency, has also followed these trends very closely, while exceeding Bitcoin in returns across most time periods. We can see that the Ethereum to Bitcoin ratio tends to increase during bull markets, and has been on an uptrend for a while now. More importantly, Ethereum has a number of fundamental differences with Bitcoin that make it, in my opinion, more likely to be widely adopted than Bitcoin. These include the upcoming move to proof of stake from proof of work, which mitigates the negative press from the environmental impact of energy use, and the use of the Ethereum blockchain for many other cryptocurrency projects, for example, NFTs and smart contracts, which are being used by major institutions. So in general, Ethereum has seen institutional adoption similar to Bitcoin, and we even have multiple Ethereum ETFs in Canada that we have access to. Furthermore, the same models that predict that the price of Bitcoin will increase to around 100,000 USD also predict that Ethereum should reach around a $10,000 USD price, which for the past year or so has meant that Ethereum should, in theory, have better returns. So overall, our investment thesis has been to dollar cost average into the cryptocurrency markets while it remains below our target price of an $100,000 Bitcoin and a $10,000 Ethereum. Then we will dollar cost average sell our holdings as the cryptocurrency market reaches these levels and becomes overvalued in the short term based on these models. Our portfolio is heavily weighted towards Ethereum while still holding some Bitcoin, as we believe that Ethereum has more upside potential than Bitcoin while having a similar risk profile. Thank you very much for watching, and if you want to become a member of the Broke Student Advice Discord and see the exact holdings of our mock Broke Student portfolio, you can head on over to the Broke Student Advice Discord and become a member for absolutely free. That's all.